America bolta hai trade deficit. Par asli kahaani kuch hai. For years we've heard about the US trade deficit with India, right? It's like their favorite dinner party complaint. Oh, the imbalance, the unfairness. They paint this picture of India just selling, and America just buying. But hold up, is that the full story? Or is it a carefully curated highlights reel designed to make Uncle Sam look like the victim in this economic blockbuster? Because when you start digging, when you actually look beyond the surface level trade figures, a completely different narrative emerges. Haan, sahi, suna, aapne. There's a whole universe of financial inflow from India to the US that conveniently gets left out of these deficit conversations. We're talking billions, folks. Billions that flow from your pockets, from Indian businesses, directly into the American economy. And this isn't just some conspiracy theory I cooked up in my basement. The Global Trade Research Initiative, or GTRI, yeah, a legit think tank, just dropped a report that pulls back the curtain on these numbers. They're exposing how the US makes a massive surplus from India when you count. So, what are these hidden streams of revenue? How is America quietly cashing in while publicly crying foul about a trade deficit? We're going to break it all down. From our students funding their universities to our data fueling their tech giants, and from Wall Street's Indian ventures to the big-ticket defense deals. Get ready, because this isn't just about economics. It's about perception, power, and the real price of our relationship with the US. The numbers don't lie, and trust me, these numbers are eye-opening. All right, first up, education. You know the dream, right? Every other Sharmaji ka beta or Betty heading to the US for that coveted degree. From MIT to Stanford, from Columbia to USC, Indian students are everywhere. It's a massive export of talent, a brain drain we often lament. But let's flip the script. For America, this isn't a brain drain. It's a cash pipeline, a torrential downpour of Indian rupees converted into US dollars. Think about it. Tuition fees at these universities? Astronomical. We're talking tens of thousands of dollars per year, per student. And that's just the sticker price for the education itself. Then add living expenses, rent in cities like New York, Boston, or San Francisco. Groceries, transport, books, health insurance, it all adds up. Indian parents are literally funding a significant chunk of the American higher education system. We're not just sending our brightest, we're sending our bank accounts along with them. The numbers are staggering. We're talking billions with a B every single year. This isn't chump change. It's a substantial economic contribution that keeps these universities running, funds research, and supports local economies around these campuses. This revenue stream is so significant, it's practically an industry in itself. And this isn't just about the universities themselves. Think of the ecosystem that thrives around these students. Local businesses, landlords, even the part-time jobs that American students might get because the university has more funds. It's a direct injection of Indian money into the American economy. But do you ever hear figure when they talk about trade? Nope. It's the invisible export from India, or rather, a massive import of services for the US. So, while they count the t-shirts and spices we sell them, they conveniently forget the billions we spend educating our kids on their turf. It's a masterclass in selective accounting, wouldn't you say? Next up, let's talk digital. India is a digital behemoth, right? Over 1 billion people, and a huge chunk of them online. We're scrolling, swiping, streaming, and shopping like there's no tomorrow. We are, without a doubt, one of the biggest data markets on the planet. And who's cashing in on this digital gold rush? You guessed it. American tech giants, Google, Meta, that's Facebook and Instagram for those still catching up, Amazon, Netflix, Apple, Microsoft, their logos are practically a part of our daily landscape. They're not just providing services, they're minting money from every click, every view, every subscription. Think about the ad revenue. Every time you search on Google or scroll through Instagram, those targeted ads. Cha-ching for Silicon Valley. Indian businesses, big and small, are pouring money into these platforms to reach. Then there are the subscriptions. Netflix, Amazon Prime, Spotify, Disney Plus Hotstar, which has a US parent. We pay for cloud services from AWS and Microsoft Azure. We buy apps and services from the Apple App Store and Google Play Store. It's a constant, relentless flow of Indian rupees into American tech coffers. This isn't just a little side hustle for them. India is a key growth market, a revenue engine, and the scale of this is mind-boggling. We're talking billions upon billions of dollars annually. This digital services export the US-India is massive. But again, when the trade deficit conversation happens, where is this mentioned? It's almost like this digital economy exists in a parallel universe, separate from the real trade of goods. But it's very real money, my friends. Money that creates jobs in California, funds R&D for the next big app, and boosts shareholder value for these American corporations. So, while we're consuming their digital products, they're consuming our cash. It's a digital dukandari where the shopkeeper is American and the customer base is overwhelmingly Indian. All right, let's move from Silicon Valley to Wall Street. Because American financial firms, they love India. And I mean it. We're talking big banks, investment houses, private equity giants, insurance companies, names like Goldman Sachs, Morgan Stanley, JP Morgan Chase, Citibank, AIG. They're not just names you see in Hollywood movies about financial crises. They have significant and very profitable operations right here in India. They're deeply embedded in our financial system, and trust me, they're not here for charity. They are here to make serious bank, and they are doing exactly that. How are they raking it in? Oh, let me count the ways. They're involved in investment banking, helping Indian companies raise capital, advising on mergers and acquisitions. They're managing assets for wealthy Indians. They're providing corporate banking services, trade finance, and treasury solutions. U.S. private equity firms are investing heavily in Indian startups and established businesses, looking for those sweet returns. American insurance companies are selling policies to millions of Indians. Every transaction, every deal, every policy sold adds to their bottom line, and a significant chunk of that profit flows right back to their U.S. headquarters. This isn't just pocket change. It's a torrent of financial service fees, commissions, and investment profits heading stateside. This is sophisticated, high-value service export that doesn't show up when they're tallying up how many mangoes India sold to the U.S. It's the kind of financial wizardry that keeps the U.S. economy humming, but it's powered in no small part by the opportunities and the market in India. So, while the headlines might scream about a goods deficit, the quiet hum of financial services generating a surplus for the U.S. often gets conveniently muted. It's a classic case of look over there, while the real action is happening somewhere else. Now let's dive into something a little less tangible, but incredibly lucrative intellectual property. IP, baby. This is the secret sauce, the invisible hand that quietly funnels billions from India to the US. We're talking patents, trademarks, copyrights, and, crucially, licensing fees. Think about it. So much of the technology we use, the software that runs our businesses, the entertainment we consume, even the brands we aspire to, is owned by American companies. And to use it, Indian companies and consumers have to pay up. Every time an Indian company uses licensed software from Microsoft or Oracle, that's a payment to the US. Every time a fast food chain, which is an American franchise, opens an outlet in India, that's money flowing to the US. When Indian pharmaceutical companies pay for licenses to produce drugs, or when our entertainment industry pays for rights to American content, it's the same story. These aren't one-off payments. These are ongoing, often substantial royalty streams that American corporations count on. It's like a subscription model for using American innovation and brands. This revenue from IP is massive, and it's incredibly high margin for the US companies. They did the R&D once, and now they collect fees from around the world, with India being a significant contributor. It's a brilliant business model, no doubt. But the point is, these billions in licensing fees and royalties are a direct earning for the US from India. Yet, when the trade balance is discussed, this invisible trade in intellectual property often gets overshadowed by the visible trade in physical goods. It's another huge piece of the economic puzzle that shows America isn't just selling us planes and almonds. They're selling us ideas, brands, and access, and we're paying top dollar for it. Last, but definitely not least, let's talk about something that makes headlines, but whose financial implications for the US are often understated in the deficit debate: arms sales. Defense. India is one of the world's largest arms importers, and for the past decade or so, the US has emerged as one of our top suppliers. We're talking fighter jets, transport aircraft, helicopters, missiles, drones, naval systems, the whole 9 yards. This isn't about buying a few rifles. This is about multi-billion-dollar deals that significantly boost the American defense industry. Think about some of the big purchases: C-17 Globemaster transport aircraft, P-8I Poseidon maritime surveillance planes, Apache and Chinook helicopters, M777 howitzers. These are state-of-the-art, very expensive pieces of military hardware. And who benefits? American defense contractors like Lockheed Martin, Boeing, Raytheon. These deals mean jobs in American factories, profits for American shareholders, and a hefty export earning for the US. This is a direct massive sale of goods, very high-value goods from the US to India. Now, you might say, Gopal, arms sales are goods, so they counted in trade figures. And yes, to some extent they are. But the narrative of a persistent one-sided deficit often downplays the sheer scale and strategic importance of these sales. When India signs a multi-billion-dollar defense deal, it's a huge win for American industry and a significant inflow of cash. This isn't India taking advantage. This is India making strategic purchases that pour billions into American coffers. So, when we hear about the trade deficit, we need to remember these big-ticket items that are balancing the scales, or even tipping them, in ways that aren't always highlighted. It's a crucial part of the real economic story. Hey, so there you have it. Education, digital services, financial operations, IP royalties, and massive arms sales. When you add all these up, these billions and billions of dollars flowing from India to the US, that so-called trade deficit America keeps harping on, it starts to look less like a deficit and more like a carefully constructed illusion. The GTRI report lays it bare. The US actually enjoys a significant, when you consider the full spectrum of economic engagement, especially in services and other invisibles. It's a completely different picture from the one usually painted. This isn't about India bashing or America bashing. It's about getting to the truth, about understanding the complete economic equation. Yeah, report surf numbers nahi. Ek reality check high. Our will be hard-hitting. It challenges the dominant narrative and forces us to ask tougher questions. Why is one side of the story constantly amplified while the other remains in the shadows? Who benefits from this selective storytelling? It makes you wonder about the motivations behind constantly playing the victim card on trade. The reality is, the US-India economic relationship is vast, complex, and as the data shows, incredibly lucrative for the United States across multiple, often underreported, sectors. The flow of money isn't just one way. So, the next time you hear an American politician or pundit lamenting the trade deficit with India, remember what we talked about today. Remember the students, the software, the stocks, and the stealth bombers. तो अब सवाल ये है, US deficit का रोना क्यों रो रहा है, जब मुनाफा उसी का हो रहा है?